Imagine trusting someone with your money. Not a small amount, billions. Billions meant to build hospitals in Pakistan, clinics in sub-Saharan Africa, clean water systems across the developing world. Imagine that the person holding that money had a name that commanded respect in every room he walked into, from Davos to Dubai, from Harvard lecture halls to the United Nations. Now imagine finding out it was all a lie. In 2018, one of the most celebrated private equity firms in the world collapsed almost overnight. Not because of a bad investment, not because of a market crash, because the man at the top had been secretly dipping into funds meant for the world's poorest people and using that money to keep up an illusion so vast, so meticulously maintained, that even the world's most sophisticated investors never saw it coming. How does a man build a $14 billion empire on a foundation of borrowed time, and why did no one ask the right questions until it was far too late? Abraaj Capital was not your average investment firm. Founded in Dubai in 2002 by Arif Naqvi, a Pakistani-British financier with movie star charisma and an almost mythological belief in the power of emerging markets. Abraaj became the crown jewel of the financial world's conscience. This was impact investing, the idea that profit and purpose could coexist. You didn't just make money. You made a difference. And for years, the world bought it completely. Governments invested. Foundations invested. The Bill and Melinda Gates Foundation invested. The World Bank invested. American universities invested. The most cautious, most diligent institutions on earth handed Arif Naqvi their trust and their capital. He seemed like the future of finance. But beneath the polished speeches and the philanthropic headlines, something had gone very wrong, and the closer you look at how it unraveled, the more unsettling the story becomes. The man who sold the world a dream. Arif Naqvi understood something that most financiers never grasp. Narrative is a currency. He didn't just pitch investments, he sold a vision. A world where capitalism could heal itself, where the right money, directed by the right people, could lift millions out of poverty. He was magnetic, fluent in the language of both Wall Street and the global South. He could stand in front of a room of billionaires and make them feel morally obligated to invest. And they did. Year after year, the money flowed in. By the mid-2010s, Abraaj managed more private equity capital in Africa, Asia, and Latin America than almost anyone else on the planet. Naqvi's face appeared on magazine covers. He was shortlisted for a United Nations leadership role. World leaders returned his calls. But behind the scenes, the pressure to maintain the illusion was becoming impossible to bear. When the numbers stopped adding up. In 2017, something small cracked. A $1 billion healthcare fund specifically created to build and operate hospitals across the developing world wasn't performing the way investors expected. Naturally, they asked for an audit. A routine request. The kind of thing that happens every day in finance. What should have been a straightforward review turned into something far more troubling. The auditors discovered that money earmarked for healthcare projects had moved. Not invested. Not delayed. Moved into Abraaj's general operating accounts. The Gates Foundation, the CDC, and other investors pushed harder. They hired forensic accountants. And the more those accountants dug, the darker the picture became. Funds had been commingled. Investor money meant for specific projects had been used to plug holes elsewhere in the business. Naqvi had essentially been running a financial shell game, robbing one account to satisfy another, staying one step ahead of scrutiny while continuing to raise fresh capital from new investors. It wasn't just mismanagement. It was deliberate, calculated, and it had been going on for years. The empire in free fall. Once the whispers started, they couldn't be stopped. In February 2018, the Wall Street Journal published a story that sent shockwaves through the global investment community. The headline was careful, clinical, but the implication was devastating. Within weeks, Abraaj's investors had frozen commitments. Employees began leaving. Regulators in Dubai and the Cayman Islands launched investigations. Banks that had extended credit started calling in their loans. And then, almost in slow motion, the whole thing came apart. Abraaj filed for provisional liquidation in June 2018. The firm that had once managed $14 billion in assets, the firm that had promised to reshape capitalism for good, was functionally dead. In less than 6 months, Naqvi fled to London. Then, in 2019, he was arrested at Heathrow Airport on a U.S. extradition warrant. The charges included wire fraud and racketeering. The man who had lectured the world about ethical investing was accused of stealing from the very funds he had created to help the vulnerable. Here is where the story takes its most disturbing turn. Because the money that went missing wasn't abstract. It was earmarked for real hospitals that were never fully built, for medical equipment that was never delivered, for clinics serving communities in Pakistan, Kenya, Nigeria, places where the gap between a functioning healthcare system and no healthcare system is the gap between life and death. And yet, for years, the fraud persisted because everyone wanted to believe. The investors wanted to believe they were doing good. The regulators wanted to believe the system worked. The media wanted to believe that impact investing was real. Arif Naqvi understood that desire better than anyone, and he exploited it without mercy. The legal proceedings continue. Naqvi denies deliberate wrongdoing. But the money is largely gone. The firm is dead. And thousands of investors, including charitable foundations, lost hundreds of millions. The Abraaj story is not simply a tale of greed. It is a warning about the seductive power of a good story and how easily that power can be weaponized by someone with enough charisma and enough patience. The investors who lost money were not naive. They were among the most sophisticated financial minds on earth. But they trusted a narrative over the numbers. They trusted reputation over evidence. And by the time the evidence surfaced, it was already too late. In a world increasingly drawn to investments that promise to do well by doing good, the ghost of Abraaj still lingers. Because the question it leaves behind is one that no one in the industry has fully answered yet. How many more Abraaj are still out there, still raising money, still delivering speeches, still making the world believe